And so what I think we're watching is a market that's maturing. Institutions are coming in. It's getting bigger. And so what you're starting to see is kind of muted volatility. And that means that people who are hoping Bitcoin's going to go to $400,000 or $500,000 in a bull market, this cycle is probably not going to happen. But also people who think that you're going to get, kind of 85, 90% drawdowns in the bear markets. That's probably not going to happen either.
ETH, since it came out 2015, has outperformed Bitcoin. It's a vibrant, growing economy. And it is generating wealth. As ETH goes to new all-time highs, everybody who owns ETH will be in profits. And what people do is recycle profits into longer-term wealth. You can hold your money in Bitcoin. That's a great long-term store of wealth.
Anthony Pompliano points out that while Bitcoin remains volatile, the character of that volatility is shifting. In past bull markets, it wasn't unusual to see brutal 30% corrections during an uptrend. But this time around, the pullbacks have been noticeably more minor, closer to 10 to 15%. To Pompliano, that's a sign the market is maturing. The difference, he argues, comes down to the presence of institutional investors and ETFs. As bigger players with longer-term horizons enter the market, they help smooth out the wild swings. That doesn't mean Bitcoin won't ever be volatile again, but it does mean we're less likely to see the extreme outcomes of the past, whether that's a sudden melt up to $400,000 or $500,000, or an 85 to 90% crash that wipes out years of gains. Looking forward, Pompliano still believes Bitcoin could eventually reach the $1 million mark, but he doesn't expect that milestone in this cycle. For now, with prices around $112,000 to $113,000, he argues Bitcoin looks oversold. Adding speculation around potential Fed rate cuts and fresh capital flowing in from Bitcoin-focused companies, Pompliano sees a setup for renewed strength heading into the final quarter of the year. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Well, I think that Bitcoin is a very volatile asset. And what we know is in bull markets, usually there are these drawbacks. But the drawbacks historically have been 30% drawdowns. And these haven't been 30%. These have been more like 10, 15% drawdowns. And so what I think we're watching is a market that's maturing. Institutions are coming in. It's getting bigger. And so what you're starting to see is kind of muted volatility. And that means that people who are hoping Bitcoin's going to go to $400,000 or $500,000 in a bull market, this cycle is probably not going to happen. But also people who think that you're going to get, kind of 85, 90% drawdowns in the bear markets. That's probably not going to happen either. Okay. Well, I think that Bitcoin has gone from a contrarian trade to consensus trade. And in order to do that, you need it to become less volatile. Because for institutions, what they want is they want something that is more volatile than the assets they hold. But they can't have something that is going up, hundreds of percent and down 90%. And they have to constantly report kind of a mark to market. And so what I think you're watching here is just the maturation of this asset. And then what I also think is pretty interesting is the holder base is rotating. And so you went from kind of a pure retail audience that, frankly, is subject to fear and greed to now you have a lot of institutions that in public companies, they're not going to sell. You have the ETFs. They're likely going to act very differently. And so I think that this is all kind of natural and a good sign for Bitcoin in the long run. Well, I think that Bitcoin will definitely go to $1 million at some point in the future. I just think this cycle, right, it's very unlikely that it's going to go to $1 million. And so what is the floor? I don't know, right? What I do know is right now at $112,000, $113,000, it's pretty oversold. And so I would expect that you have two things lining up. You've got kind of the overselling of Bitcoin, and you're headed into kind of September, October, which is usually a pretty good time, especially if it is the year after a halving. But also, if you look at like the VIX seasonality chart, usually right about now, you'll start to see the VIX really start to kind of move upwards, and we get a lot more volatility. And so I just think that it's August. People are on vacation. They're tired. They're, not paying attention, and things kind of just draw down. And starting in September, we should see Bitcoin kind of come back alive again.
Because of what, though?
Well, I think there is kind of a simple thing of just like people in front of their screens in September. They're not in front of their screen in August. And so people are buying and being more active. But also, I think that you've got a lot of speculation on a Fed interest rate cut. I think you've got a lot of the people who raised capital for these Bitcoin treasury companies that are going to start buying in kind of late August, early September. And then I also think that if people believe that the end of Q3 and the beginning of Q4 is a good time for Bitcoin, people start to act in a way that makes that the whole blockchain, not Bitcoin, is kind of like a 2016, 2017 viewpoint. I think that that's been pretty much disproven that Bitcoin is the king. It's been the king. It's going to remain the king. But on top of that, I do think that there's a lot more opportunities for people to play this. And what you are getting is you're getting capital markets where people are optimizing for different things. Some people want yield. Some people want infrastructure. Some people want the actual underlying asset, Bitcoin itself. And so I think that you're going to get fracturing of capital, which again leads to that muted volatility. Yeah, I think there's still a lot of people who they can't buy Bitcoin, so they're going to go buy the ETFs. Now, one thing that I do think is pretty interesting is I have seen a number of people in the Bitcoin community who, are purported to have large holdings who have said, hey, look, actually, I'm going to convert the Bitcoin into the ETF because from a security perspective, it's something that somebody can't necessarily hack or take from me. I don't think that's going to be the norm. I think that you're still going to see the Bitcoin community talk a lot about kind of not your keys, not your coins.
Legendary expert Raoul argues that digital art and NFTs are one of the most surprising yet powerful breakout use cases of blockchain technology. According to Powell, no one expected art to become the most valuable form of block space, but it has. He suggests thinking of ETH as you would the United States economy. You buy ETH to gain access to the Ethereum ecosystem, where the best and most scarce assets compound in value. Powell stresses that Ethereum, despite its corrections, has consistently outperformed Bitcoin since its launch, demonstrating its vibrancy as an economy. As ETH makes new highs, investors recycle profits into longer-term stores of value, whether in Bitcoin or digital art. Powell highlights CryptoPunks as an example. With only 10,000 in existence, their scarcity and cultural status often allow them to outperform even Bitcoin over time. Looking at the macro picture, Raoul projects crypto could reach $100 trillion in value within a decade, generating tens of trillions in new wealth. He emphasizes that much of this wealth will eventually flow into art because culture, memory, and status are timeless. For Powell, NFTs are not just an investment, they are the cultural record of this technological revolution. Let's get back to the interview.
Digital art, or NFTs, are really one of the breakout use cases of blockchain technology that nobody expected. But this is the thing that has accrued enormous value. What we found now is that the most valuable block space in the world are actually NFTs. A single block space on Ethereum has traded at $15-20 million in the case of an alien punk. We've seen Beeple trade at $69 million. We've seen X copies trade multi-millions of dollars. We've seen a Ringers trade, I think, $12 million. This is the most valuable block space there will ever be. What this is you need to think of ETH as an economy. Think of ETH as part of this new crypto land, and ETH is the United States. In the United States, you're buying dollars to gain access to the US because you want to invest in America. So you use ETH to invest in the ETH economy. And if you can, you want to buy the best assets available. That's where all wealth compounds over time. Owning the scarcest assets in crypto land, it's still really an ETH. Yes, there's ordinals. Yes, there's art on Tezos. Yes, there's other things, but generally ETH has accrued the most value in this. The ETH economy captures that value. So the ETH economy is growing at a huge pace. ETH is still, even after the recent corrections it had and now the big run up, since it came out 2015, has outperformed Bitcoin. It's a vibrant, growing economy. And it is generating wealth. As ETH goes to new all-time highs, everybody who owns ETH will be in profits. And what people do is recycle profits into longer-term wealth. You can hold your money in Bitcoin. That's a great long-term store of wealth. Or you can hold it in art. And there's been an experiment that many people are running is, what outperforms? A CryptoPunk, of which there's 10,000, or a Bitcoin, of which there's 21 million. Now, they're not the same things, obviously, but what we found is punks generally outperform over time because they're super scarce and they have high status signaling, which is what humans love. So art is very important, but what is, to frame this up in a macro context, we're a $4 trillion asset class in crypto today. If I extrapolate out trend rate of growth, I get to $100 trillion in 10 years. I actually get it by 2032, but I could be way off. Who knows, right? But let's say $100 trillion. That's in line with other asset classes. In fact, it's less than most other asset classes. So that's not stupid. It's the fastest adoption of any technology the world's ever seen. So it should get there quickly. Great, because of Metcalfe's law that we've talked about before. But if we go to 100 trillion, then that's going to generate 96 trillion of new wealth. Now, let's assume Raoul is a total moron, which would be a good thing to do, and halve me. Well, then 47 trillion of wealth, 46 trillion of wealth is going to get generated. That's more than Silicon Valley, Wall Street, the Chinese billionaires, the Russian billionaires, the Indian billionaires added together. And we're going to do it in 10 years. That's a shit ton of money. We're all participating in that. by owning parts of these networks, but that is going to accrue in the end. Upstream of everything is art. And we will see unbelievable amounts of money going into art. So it's a great investment opportunity. It is also culture. It's the culture of this time, this great time to be alive, where technology, crypto, we're online trying to figure it all out. We've got, this tribalism going on. We're making friends. We're 24 hours a day trying to make our fortune, unfucking our futures. We will remember these days till the day we die. And that cultural memory is valuable. Like the memory of Warhol was valuable to a baby boomer, or the value of Damien Hirst was valuable for somebody of my generation. They're culturally relevant. This is massive culture happening at scale. There's 600 million wallets around the world. People are making life-changing wealth, also getting wrecked, all of the stories in between. And all of that gets encapsulated by art. So you may not think you want to know about art. You might think NFTs are bullshit. I can right-click save. You're not listening. You're not paying attention to the greatest store of wealth we've ever been given.
Bitcoin has had an incredible performance over the last 3 years, rising as much as 700% to an all-time high of $124,500 last week from a cycle low of $15,500 reached in November 2022. When compared with past cycles, this performance suggests that BTC price is roughly 2 to 3 months away from the cycle top, according to market intelligence firm Glassnode. Evolving price action, deeper institutional participation, and the rise of digital economies beyond Bitcoin all indicate that the market is entering a new phase of maturity. With shorter corrections, stronger structural demand, and parallel growth in ecosystems like Ethereum and NFTs, the narrative is shifting from pure speculation to long-term integration. As valuations climb and wealth creation accelerates, the challenge for investors will be identifying which segments of this expanding digital frontier will hold enduring value versus those that fade with hype. What factors will ultimately decide whether digital assets evolve into lasting economic pillars or remain cyclical opportunities tied to speculative waves? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.